Hello guys, how you doing? This is Joseph and welcome to Since Youth YouTube channel. I first of all want to wish everybody a prosperous new year. This is year 2023 and this is my first video in the year 2023. And I want you to subscribe and like this channel. Make sure you turn on the notification bell so that you can get notified each time I upload any new content. And by the grace of God, we'll achieve a lot through my channel in this new year. Okay, just follow every teaching I'll be making here and make sure that you always to follow it. If you have any question, feel free to message me on my WhatsApp channel and on my WhatsApp line. And you can just drop your comments. I will be glad to reply your comments. That being said, let us dive into this training. Yes, today we'll be talking about market structure. You know, in the last market structure which I told you guys, I said we are not yet done with it, but it's still there to show you guys some market structure that you need to understand. Okay, in the last video, I said there are still some things that I need to show you about market structure. So I'm going to be showing you that in this video. Just right on with me. Okay, and in case you have not watched my video, the last video of market structure, I'll be placing the link, the link to the video. You can just click on it. You're going to see a kind of the title of the video at the top right of your screen right now. It's going to be showing market structure. Click on it and watch the part one. Then after watching the part one, you can come back and watch this. Okay, so that you don't get it all mixed up or confused. Though you can understand the two independently without the other part. I would advise that you watch the other one first, then come back and watch this one. That being said, let us dive into what we're talking about. So I said market structure. Now let's assume this is a bullish market. The market is giving us an higher high. Okay. A higher high. Then once it gets here, the market does something like this. Right? Moves up, comes back down, then moves up, then comes back down, then moves like this, and moves like this. Now, if you watched the last video, now I told you that before. Now this is an higher high and higher low. That is this high, this is an high, this is an edge, right? This is an high. Now this is an high also, isn't it? I don't want to be going through these basics. These are high, but this is an higher high. Why is it an higher high? Because this high over here is higher than this high. Okay, this is a low, right? And this is a low also. But this is an higher low. This is an higher low. Why is it an higher low? Why is it an higher low? Because this low over here is higher than this low. Okay, so you must know that. So that's where you get the concept of higher lows. Okay, so now the market is moving upward, right? In this, coming on higher high over here at the top, and higher low at the bottom, isn't it? Now what happened? Once the market goes back, this is a market structure, and this is an uptrend structure, right? Now the market gets here, comes back here, then moves back. Ideally, we will think that okay, the market will just come back, they test this level, isn't it? Then continue going back up. But the market broke this minor resistance level, which is a support over here. But when it's broke it turns this support turns resistance. Then the market comes back up, retest this support turn resistance, then moves back, then break this level, which we always look at to that is going to confirm that to us that the market has shifted this level over here. Okay, this level over here. So the market broke this level. Once market broke this level, then we can confidently say that there is a market structure shift. Okay, that is, the market has changed from what? From a bullish market structure. Now we are expecting that there will be a bearish market structure. So once the market retests this place, then you move back here. Now that's not where I'm going. But what I want to what I want you to notice is this structure over here. This, and this. What does it look like? What pattern does this form? You will agree with that this is an head and shoulder pattern. This is an head, this is an head, Abi. This is the head, these are the shoulders. Isn't it? So these are the two shoulders. So this is an head. So what I want to just mention here is that head and shoulder patterns are always a key pattern that you need to watch out for that signifies a market shift. Okay. Now, how do you trade this head and shoulder? Now, this is how you trade it. You can either enter it here or you enter here. Whichever two ways. That is, you can either enter at this initial starting of this head and shoulder over here, this second shoulder, or you enter when the neckline, this place, this is what we call the neckline, this place over here, of the shoulder is broken. Now, how do you enter? Now, once you see the market forming this kind of thing, it moves up, comes down here, then moves up again, then you expect that it should retest this support at this level, then moves up. But once the market fails to do that, and the market does what? The market comes back here, okay? Once it's come back here and is unable to break this level, then you start seeing the market moving up, then you can ideally say that you can be expecting the second shoulder. Okay. So what you want to do for me now here is that you draw a line, is a straight line over here, like a resistance line, this place, then you draw it to this level. So that this is the minus of resistance level now. Now expecting that the market will hit this place, then come back here. Okay, then you set your take profit at this place and your stop loss. Actually, set your stop loss at above the high of this place. Or if you want to be so aggressive, you can place your stop loss at the high of this place. Okay, okay. So once the market is here, then once it's here, what are you looking at for? You are looking at for some kind of reversal candlestick, like a bearish engulfing candle. You are looking for pin bars. You are looking for a doji. You are looking for a tweezer. Anything that signifies a reversal candle at this minor resistance level. Okay, then you can expect the market to move on to come back. Then that is exactly how to trade this without expecting it to form at this neckline. And this neckline, if you missed the entry point at this place, then you can expect that once this neckline breaks, then you expect the market to come back and retest this neckline. Once the market retests this neckline, then what do you expect? You are expecting the market to continue moving back. And probably you can also start expecting to see a reversal pattern. I mean, a reversal candlestick like a pin bar, a doji, and a graphic candle, a tweezer, or those kind of stuff. And then you begin to sell. But in this kind of case, your stop loss will be at this place, and then you take profits will be around this place or this place. I hope that is very clear. Now let's look out for an example of a selling situation, that is a bearish market structure. Now look at what is market doing now? Going back, then the market comes back in, then you see it moving back in, then you see the market coming back in, then coming back in, then moving back down, then coming back like this. Then So at this point, what does this look like? This look like what? An inverse head and shoulder. Okay, that is this head and shoulder which you see here. If you should turn it upside down, again, this is how it's going to look like. So that's what they call it, inverse head and shoulder. This is the head over here. This is the head. These are the two shoulders. Okay, so how do you trade it? The same way you trade this one, but in this kind of case, once the market you draw a minor support line over here. So once the market comes back, breaks this level, then comes back, break this level, this line level, then comes back here. What are you expecting? A pin bar, a doji, a reversal pattern, or just the reversal candlestick pattern. Okay, then expect the market to what? To spiral down and to go back there. And if you're unable to enter here, your stop loss will be either here, or you say your stop loss will be around at the high of this place. Okay, and take profit will be either here or here. And if you are unable to enter here, what do you want to enter? Then you are looking at entering at this neckline. Okay, that is once the market goes up, then you expect the market to come and retest this neckline. Once it retest, then you can confidently buy and then set your stop loss at around this place. At this point, what are you looking at for? You're looking at for a pinning bar, a doji, and a coffee candle, a reversal, a tweezer, just something like a reversal candle, especially initial candles. Okay, probably when I will be talking about candlestick analysis, so I'm going to be explaining some candlestick pattern and candlestick formation for you, so that you can know how to easily understand your candlestick, because you begin to see so many different names of candlestick and then you go to say, oh, this thing are so much. How can I put all this on my head? You don't have to do that. Okay, just watch out for the video on candlestick. And so then you see the market going down and going up and up and up and up. Okay, so that is that. So that being said, let us dive into the chart and then let us look out for examples of how this thing plays out in the charts. Okay, thank you. And let us just look at the chart. Hello guys. Yes, this is an example of an inverse head and shoulder. Okay, this is Ethereum USD on 1 hour time frame. Yes. Now look at this. Market is forming, is going downside. Okay. Comes back here. Let me annotate it so you can clearly see it. So I don't just look up stuff about it. Market moves down, right, then moves up, then moves down, then it, and moves up, then moves down, and moves up. What is this? This is an inverse head and shoulder. This is the shoulder. This is the shoulder. These are the two shoulders. And this is the head. Can you see them right there? So you see, when you draw them, it's so easy to draw. But when it comes to the charts, then to see them, it's kind of difficult for you. The more you try to look for this pattern, the more you try to, once you see an uptrend forming, and then you are expecting something like a head and shoulder to signal a market shift or thereabout, you're able to easily identify them. Then you can see what happened here. Now, at this second leg, as you began to see some, let me clear them so you can see them clearly. At this level here, when you begin to see, you begin to see something like pins to the lower side, pins to the lower side. At this point, you can confidently buy this market, even at this second level here. You can confidently, and then set your stop loss at around this level here, below this place. Then you take profit, will be at the origin of where this was starting. This level, take profit. You get what I'm saying? Then you have bought. Look at one candle, the market just went ahead. So for you that you were able to enter here, what can you do? Like I told you, this is the neckline of the candle, the minor support level. This is support level rather. This support level here, which after this is this minor support level, which you are expecting that once the market comes down here, then you are expecting to what? To buy. So after and this is the neckline. I just drew this line to show the neckline. So this is the neckline. Then what the market moves up, then comes down to what? To retest. This is a candle that moves up over here. Even retested, this candle come back, retested here again. Look at this initial candle over here. You might have entered the year or even at this level. Then your stop loss will be here. Will be at this level. Then off you go. Now take profit will be still here. Look at how the take profit was smashed. Can you see the example of an inverse head and shoulder? So let's look for the head and shoulder pattern itself. This is, guys, this is Nasdaq on the 1 hour time frame. Okay. Now I want you to pay attention to this. Now look, the market was an uptrend, a very strong bullish candle without any bearish candle. Okay. Look at it. It goes here. I don't know how it is, but it's an head and shoulder. It got here, moves down here, then moves up, then moves down, then moves up, then moves down. What does it look like? This is an S. This is the head. This is S. This is the shoulder. This is the head over there. This is another head over here. Am I correct? Then the market moves down. This is the neckline over here. At this point, this is your minor support level. Resistance level. Let me clear it so that you can have a good view of it. This is your minor resistance level. Then once market moves up, then come back to retest here. You're looking at doing what? Selling, take setting stop loss around this place. Now look at what happened. The market comes back here. Did it do this neckline at all? The market still keep on moving up without hitting our stop loss, by the way. So now the market then all of a sudden with a strong bearish candle moves down. Then you'll have seen how this is going as you have predicted. You should go for yourself. But the market then moves up to what? To retest this level over here with this candle alone, a doji pin back the upside down. Then at this level, you're looking at entering here. Probably you can just take your stop loss. Not probably you should set stop loss around this level, but if you want to play the conservative, you can set this at around this level. Then your stop loss, your take profit will be here. Here. This is where the region, this is where the bullish, the bearish candle started from. Your stop loss should be what? Your take profit rather should be here. Look at it, it was smashed in how many days? 1, 2, in 2 days it was smashed. So guys, that's how to trade that's how to identify market structure shifts using the head and shoulder pattern, and that's how to trade them. I've shown you how to identify the market maker and the market structure shift. When the market is in a bullish trend, uptrend, how you can identify it with head and shoulder, and how you can trade this. So that's about that. So in the next video, just anticipate the next video. Okay, I will be showing you some this video. If you have not yet subscribed to this YouTube channel, kindly like, subscribe to this YouTube channel because I will be posting frequently in this new year. So I hope you enjoy this and have a pleasant, and I wish you a profitable trading year in this very year 2023. Have a nice day, guys. Bye bye. Until I come next time.